Good evening, everybody. I take it everybody's having a nice winter evening. Pretty cold here. But once again, we've got the great pleasure of having Geoff Bysshe with us. Geoff has got a lot of trading experience, even being a floor trader in the past. We've put up some of his background on in the chat, but I think the benefit you get out of listening to somebody like Geoff is that he has, as good experience as you can get, especially coming or having experience of being a floor trader. And he's also set up trading funds. So you're getting somebody that's right there smack dab in the mix. So with that, Geoff, we're anxious to see your technique. Welcome to the Candlestick Forum.
Thank you very much for having me, Steve, and thanks everybody for coming out. I don't know if any of you are in the Northeast like I am, but we got pelted today with all kinds of bad weather, so I hope everyone out there is warm and not worried about losing their power. So I've got a really exciting, it's one of my favorite presentations for you tonight. Before I get started, though, I just want to make sure you can all hear me. So if you guys can just say, hey, yes, hello, whatever, in the questions box, and I'll know that you can hear me. And, you know, a lot of times we start a presentation, great. So a lot of times we start with presentations with our titles. I love titles. I'm going to show you my title in a second. But I want to make sure right from the start we're on the same page. And this quote from Mukesh I have up here just kind of exemplifies what I hope you're going to walk away from this presentation with, which is something that will enlighten and give you more insight into your trading, maybe even show you a framework that can help you look at the market in a new way. I underline frameworks because at Market Gauge, we're always looking to help traders look at the market in a very structured way, look at it in a way that perhaps you weren't aware you could use to make your trading more profitable. So the name of this presentation is How to Identify and Profit from the Market's Next Big Winners and Avoid the Next Big Losers. All right, now I know that's kind of long, but I like to make the name of the presentation pretty much what I expect you to get out of it. And while I'll talk about this in a little later, I can't imagine there's a more exciting time to be able to have the confidence to not only avoid the winners, catch the winners, but also be confident that you're going to avoid the big losers. So how are we going to do this? How are we going to identify the market's next big winners? Well, there are market-leading stocks that have two trends that enable them to move to the beat of their own drum. Those are the stocks or the ETFs or the trends that we're going to focus on. And how are we going to avoid the market's big losers? Well, there are two hidden trends in the market that are sabotaging many traders' success. Hopefully not yours, but unfortunately I suspect that without you even realizing it, they are. And it's not your fault because you can't see these trends. And that's what I'm going to show you tonight, how you can see them. So as a result of this webinar, you're going to learn two hidden trends that pros focus on that you can't see. I'm also going to share with you three conditions that you should know before buying or selling any stock to maximize your trade's potential, and which stocks are at the greatest risk of collapsing even if the market continues to move higher. Plus, I'm going to show you which stocks have the greatest potential to lead any bull market higher or any bull market lower. The result of all this is you're going to have the best trade set up for simple but explosive trades, which is perfect for options and works great for stocks and ETFs too. Now, the reason I mention options is because who out there trades options? When you trade options, you almost always have to be pretty spot on with your timing, right? So if you've got something that can show you when you have explosive potential for options, it's also directly applicable to both stocks and ETFs. So we've created this webinar to share what I described as my favorite method for identifying great trades that will help you become a much more profitable trader as soon as tomorrow. Now, I say we. Steve gave me a really nice introduction. I'm the person presenting here, but I have a lot of help behind me, and I have two other partners. And Market Gauge has been around for 20 years, since 1997, and we're dedicated to helping people like you learn how to actively invest or trade safely and profitably. Our passion is basically finding better ways to profit from trading through both automated trading systems and simple but professional caliber rules-based trading strategies, the frameworks that I was talking about earlier. And in summary, our mission is basically to provide an environment or a resource where anyone can benefit from our decades of trading experience, and our passion is to simplify building wealth and income from the markets. So as I said, we've got three partners with over 117 years of experience collectively, and we all have a unique set of qualities that work well together in helping you reach your goals and hopefully even exceed them. So Keith, my co-founder, actually turned $10,000 into almost $1,996,000 in 18 months as a floor trader in the gold market. He then went on to build one of the first market analytics platforms called Market Vision, which was so far ahead of its time in the 80s that it actually had Windows before Microsoft. And he's managed money for one of the biggest, most successful hedge funds in New York, Millennium Partners. Keith met his wife, Bysshe, on the floor. She's a floor trader as well, and when she was there, she was a market analyst for some of the biggest firms of her time. But she has a unique quality of also having a master's degree in special education. So throughout her trading career, she's served as a consultant to schools for modifying curriculum for kids with special needs. She's also was named this year one of the top Twitter accounts investors need to follow in 2007 by MarketWatch. Those are MarketWatch's words, not mine. And then myself, I joined Keith in 1990 on the floor, and my original job was to be his assistant, but I went on to get my own seat and trade futures and options on the floor. I also went on to manage money with him at the hedge fund Millennium Partners in New York, which was a quant-based hedge fund. And from there, we have focused on developing, as I've described, numerous applications and trading systems and courses to help thousands of traders like you trade with the Market Gauge Professional Edge. Now, when I say a professional edge, I mean you'll be using tools that the pros have also used from us. We've been on platforms such as Reuters, Bank of America, Fidelity, Bridge, Barron's, Townsend Analytics, ILX, ADP, and more. So what I want you to get out of this presentation is the same thing that Keith got out of it. I want you to be able to use the information that you learn here as quickly as tomorrow, to be able to look at the markets differently. Now, I know, however, that what I'm about to show you is not necessarily for everyone. So I like to take just a few seconds at the beginning of the presentation to make sure that this is for you. So if it's not, you can enjoy the rest of your evening doing what you want to do. But if it is, I want you to really focus on it and take advantage of this the next 40 minutes, right? Because this is for you if you're willing to accept the fact that it is going to require that you do some work. This is not an automated trading system. It is also going to require that you read a chart. And the chart's going to have two simple indicators. So this training is for you if you believe that traditional charts do not show you the whole story. I mean, how many of you have looked at what appears to be a perfect pattern on the chart only to find out that it completely falls apart and goes in the opposite direction? As I said, it's not necessarily your fault. Also, this is for you if you're willing to commit to use simple charts with two new indicators that determine which trends are reliable and which trends are dangerously likely to reverse. All right. Finally, this training is for you if you like to swing trade or day trade stocks, ETFs, options, or currencies that are about to make big moves. Now, it's the big moves that I want you to focus on, because if you're an option trader and your focus is to find stuff that's going to sit and you can just collect premium because it's not going to move, this is not for you. All right, we're going to find stuff that is going to take out support, take out resistance, and accelerate. All right, so this is for you if you're committed to evaluating trends like a pro and use charts that other traders don't have. Right? So if you'll commit 45 minutes, I'll share these indicators and these trading tactics that you can profit from as soon as tomorrow. And hopefully, you'll leave this training feeling empowered like the past attendees have. All right? Now, I do have to put up this quick disclaimer because I'm going to talk about real trades, real setups, and I am not a licensed financial advisor. So for that reason, access to this webinar is for educational and informational purposes only. All right. So at the highest level, if you knew which market, which stock market, which stock index, the Dow, the NASDAQ, the S&P, or the Russell to focus on, would that not be helpful to know that you're in the hottest or the best trend? So right after the election, the IWM, maybe you remember this, rallied. The IWM is down in the bottom chart here. The IWM rallied like a banshee, right? But at the same time, the Qs kind of meandered a little bit higher. They basically were flat. So if you made the right decision to buy after the election, it really made a big difference based on which index you bought. All right. Now, at the beginning of 2017, that whole dynamic just switched. So what looked like the right place to be, the IWM, as soon as the end of December came around, it was no longer the right place to be. And as soon as 2017 began, the Qs took off. Right? So how valuable would it have been to know ahead of time with confidence that IWM is where you wanted to be after the election? And then after January 2017, the Qs is where you want it to be. Okay, well, that's what I'm about to explain. And you're going to be able to see that with something as simple as the blue line and the red line that I'm displaying at the bottom of each of these charts. So I'm going to kind of go fast forward, and then I'm going to pull it back and explain how this blue line, red line thing works. But I want you to see where we're going with this. It's as simple as when the blue line is under the red line, you're going to see the trend as being bearish. When the blue line is over the red line, the trend is bullish. Now there's also a black line, and the black line is a longer term measure, so even better would be when we've got the red line over the black line. So in this case, you can see the red line under the black line here is relatively negative. You can have short-term trends moving up. But as you can also see, when you have this breakout in the IWMs here, in a situation where the blue line doesn't get back over the red line, it's really suspect. And as soon as it comes back down, that's one you're going to want to avoid. So is that pretty straightforward? In the meantime, or I should say, so as the IWM is kind of falling apart here in August, you got a completely different thing going on over in the Qs. All right, you can see that the blue line can come up over the red line even before you break out to new highs. All right. So you can see how if you follow the blue line and the red line, it will give you a really strong sense of which way the trend is going to go. So you're about to discover how these lines work and how you can apply them to the market. All right. And the way I look at the approach with this particular measure is I want to catch big moves like we see in the Qs. Now, when you look at my candle charts, you're going to see three moving averages. The green line is the 200, the dark blue line is the 50, and the magenta line is the 10. All right? I'm going to use those as basic levels of support and resistance. And we're going to look at this in a very simplistic way to get started, which is simply if you knew which layers or levels of support and resistance were going to hold and which ones were going to break, would that be helpful in being able to identify when to enter a trade and when to exit a trade or when not to enter the trade, all right? So in other words, in the when not to, this breakout in February, or what looks like a breakout in February in the IWMs, really, if you look at the indicator, did not look like it was going to break out at all. Instead, if you were looking at the breakout in the Qs at the same time, according to the indicator, that's the breakout you wanted to take, right? And I can take that all the way back to the beginning of January, right? Is that pretty straightforward? All right. Now, what if you could apply that to all four markets and really know which one was the strongest? Well, you can, right? So in this case, this is the way I like to look at the markets as a whole, which is to figure out which ones are strong, which ones are weak, and then focus on those. Now that's a big picture, but we're going to apply that not only to the general markets, we're going to apply it to individual stocks, all right? So, and ETFs. So imagine having this ability on any ETFs. What if you could tell which industry group or which sector was the right place to be, all right? See, I believe that the most powerful and rewarding trades are the ones that you can enter confidently before the crowd gets in, right? This means you can enter on the breakout before everyone else rushes in. It means you can buy a pullback when other traders are waiting for the recovery to look safe. It means you can get into a base before it looks like the market has already broken out and begun to run. And maybe most importantly, it means when a stock's pulling back, you can exit before it collapses. So how do the pros do it? Well, the pros know a few things that most traders can't see or don't focus on. So as I said, in this presentation, I'm going to show you what those things are. I'm going to show you 2 trends and 3 conditions that you should really know about any position or any trend that you're in. So the first one of these is leadership. How do you measure leadership? Leadership is really the true price trend. You want to know if your trade is leading, following, or moving in the opposite direction of the market. The second trend you want is volume. So when I say volume, as you'll learn briefly, volume, just looking at the individual bars, some people can do it, but there's a much more effective way. What you really want to know is the trend of volume and whether or not that trend of volume is supportive of the current price trend or going against it. And the third thing you want to know is a measure of volatility. Now, when I say volatility, what I mean is a measure that will tell you whether your trade or your trend is actually trending, whether it's overextended, whether it's consolidating or compressing. And by knowing that, you'll know whether or not it's getting ready to move or whether it could be really in a condition where it's more likely to reverse. So those 3 things, when they form the right pattern with these 3 conditions, is where you get the best opportunities and big profits. So you have leadership, volume, volatility. Those all together at the same time equals big profits. And I'm going to talk about these indicators as our triple play indicators, and that's where triple play comes from. So let's dig into each one of those in a little bit more detail. So first of all, if you're looking at typical charts, the average chart just doesn't show you the whole picture. In fact, I'd argue you're missing the most important trend. And this is the trend that pros are looking at in a way that makes them look at the market differently. You see, pros look for trends that have their own momentum over and above what the general market is doing. And you'll hear these described as leading stocks or leading sectors. And the reason that the pros focus on what's leading is that leaders tend to continue to outperform for long periods of time. And this is a fact that is grossly overlooked by especially new traders. Even though most traders hear this particular statistic in one form of another, right? 70% or more of a stock's move is from just following the market. So that means that if you're not trading a leader, you're just getting whipped around by the market. You might as well just go trade the SPYs or trade whatever market index. But if you're trading a leader, you have an edge. You can buy dips confidently because the leaders will get pulled down by the market, but they recover faster and they recover bigger. And the leaders almost always have the best moves after market sell-offs. All right. Now, there's a couple ways you can find leaders. New 52-week highs. When I first started trading, I was a big IBD CanSlim fan, still am, but 52-week highs was a big part of that. I spent a lot of time trying to figure out how to make 52-week highs the source of my trades. And I learned a lot about momentum, and I learned a lot about buying breakouts. But what I also learned is that these work great after huge market declines. All right? But in a general bull market condition that we're in right now, it's really tough because there's a lot of stocks making new 52-week highs. But a lot of them are getting pulled up by the general market, and they're not really leading the market. They're just kind of following a market that's going up. So it's not a very effective strategy in this market environment. And not only that, do you really want to be limited to buying new highs? What I'm about to show you is how you can find leaders that are actually breaking out of bases. Now, how do we do this? Well, I have to admit that what I'm about to show you is not based on something that I just invented. I have done a lot of research. As I said, I've worked at a quantitative hedge fund, and one of the best summaries of what I'm about to show you in a different way is one of the things that James O'Shaughnessy, who wrote the book What Works on Wall Street, found. Now, he didn't just write a book. The guy also manages over $6 billion in assets. The book is awesome. If you like a 600-page book on all the different trading strategies that he was exposed to or knew about on Wall Street, and he tested them to death. The problem with the book is that his idea of a trading strategy may involve like buying 200 stocks in a basket. We can't do that. So more importantly, one of his most effective approaches to the market was momentum. And he summarized it by saying, price momentum proves to be an especially good way to identify both the stocks that will go on to perform well and those which will go on to perform poorly. Furthermore, he said over 6 and 12-month periods, winners generally continue to win and losers generally continue to lose. Now, in this presentation, I don't do it, but in other presentations, I would go on to name 3, 4, 5 other very high-profile research and fund managers who come to not only the same conclusion about momentum, but the same time frame. All right. So my point is, you don't have to take my word for the fact that momentum works. It's proven by large funds and academics. But the problem with all the research is it didn't give me a way to quickly pull up an individual stock and know whether or not I have this edge of momentum. All right? There wasn't any indicator. It's not MACD. It's not relative strength, the RSI that's on your charts. All right? So there are ways to do it, and it will work on ETFs, and it even will enable you to do it with options. Like I said, if you like to trade options instead. Now, the other way that I tried to do it was with ranking systems, because momentum by itself is not enough. Just because a stock has momentum or an ETF has momentum doesn't make it a leader. So one of the best ways to identify leaders is to have a ranking system. In other words, are the strongest stocks out of a basket? And so again, there's ways to find that. If you go to Investors Business Daily, they'll have like a relative strength ranking. Value Line used it. But that's not very easy. You have to compile all these lists. And again, you can't just pull up a chart and see whether or not your particular trend is a leading trend or not, and you can't see the trend of the trend. So eventually, because I have some programming experience, I was able to come up with a way to do it. And what we found is this enables you to buy breakouts, identify the breakouts that are worth following, identify the pullbacks that are worth buying, identify the bases that are worth buying on breakouts, and to be warned about tops that are likely to fall apart. And it's as simple, it starts, I should say, as simple as the blue line over the red line. So the examples I gave you with the overall market were the overall market. Let's take a look at Bank of America. Now I'm looking at Bank of America at a really specific time for a really specific reason. And the reason is I'm looking at it right before the election, a time when everybody was pretty much saying that if Trump got elected, the market would basically go down the toilet. Now, at the same time, the banks, Bank of America is just one example, were telling a completely different story. And you could see that story in the leadership of the banks. I, in fact, went out on our blog and said, financials and transportations are going to be the place to be after the election. I don't care who wins. And it was based on this. It was based on the fact that we had the leadership in the banks was getting stronger going into the election. And you can see when this is the election here, when they took off. But for the month, even months before that, the blue line was over the red line. These things were leading going into the election. This is where the smart money wanted to be. And we didn't know the outcome of the election. All right? So someone's asking if it's MACD. It could not be further from the MACD. And you'll see that, first of all, the blue line, look at how jagged the blue line is. The blue line is a very short-term measure of leadership. The red line is a smoothed measure of the leadership. And the black line is actually, if you're following along, the black line is a 6-month measure of leadership. And that 6 months comes from the fact that so much research has pointed to the fact that 6 months is a key time frame. Now, I prefer to identify entries and exits based on a much quicker method. So that's why we've got a quicker blue and a quicker red. The black line is kind of a baseline. ExxonMobil rallied. Looks like it was doing just fine here, breaking out to new highs. But as soon as it pulled back under the 10-day moving average, look at where the blue line was. It was under the red line. So this is telling you that this pullback is not safe. It's just not safe. All right. Now, when you get down to the 50-day moving average, a place where most people would easily be saying, look, 50 should be some good support here. There's even an area back here that should serve as some support. I'm looking at the leadership of ExxonMobil and saying this is not an area of support that we should trust, even though it's a great-looking 50-day moving average. All right? That's the power of this. And you can see another example, when it pulls back to the 50 and the 200 and a level that really should have been good support, by the time it gets there, the blue line is way under the red line. Everything is negatively stacked. You should expect that this thing is not going to hold. This is something you don't want to buy. Now, when I'm looking at the charts and you're looking at the charts, I want you to be thinking of things really simply. Is this support that I would want to buy? Is this a breakout I would want to buy? Is this a breakdown I would want to sell? Okay. So ITB looked like a really good breakout, right, to new highs here. Again, this is the 50, this is the 10. You had nice consolidation. The market was in a bullish mode at this point, the beginning of 2017. IYT breaks out. It's not a leader. this is telling you is it's only breaking out because it's being pulled up by the rest of the market. And as soon as this thing starts to pull back, unless something changes with its leadership quality, it's not where you want to be. Okay? Would that be helpful to see that if this breakout fails, or at least doesn't even have to fail, just starts to pull back, you want to either get out or never get in the thing in the first place, right? Because you're going to see examples of stuff that just looks much better. Now, as I've said, this works on ETFs and sectors as well. I happen to like to trade XBI and IBB, the biotech, so this happens to be one that I watch really closely. And these are the ways that I use it. You've got XBI trading over the 200-day moving average. All right. Now, for the purposes of a really simple way to look at the market in terms of when to get in, if a day breaks your particular level of resistance, and then you wait for the next day to follow through, that's a basic entry. If you combine that with when the blue line is over the red line, you'll have a much higher success rate. All right. So we see here breaks the 200. Is that one I want to look at? Absolutely. The blue line's over the red line. We've got good separation. If it breaks, I expect it to run up. Now, it's only going to be as good as long as the trend stays intact, and the indicator will help you keep a pulse on whether or not the trend is still intact. All right, so we're not going to buy and sell purely based on the indicator. We're going to buy and sell based on the price action and use the indicator as confirmation. Right. So in this pullback, the indicator, you can see it gets weak. So this is not an area I'd be looking to be a buyer. But as soon as it comes back over the 10 and this is now bullish, can you see how now you've got this consolidation here? You get a nice breakout. Unfortunately, not every trend continues. When it pulls back to the 50, you don't want to be a buyer in here, right? Can you see why I don't want to be a buyer in here? Blue line's under the red line. It's basically the price isn't just going down, the leadership's going down. And back here, right at the 200-day moving average, we break out over the 50, and we can see that the leadership has changed. All right, can you see how that can be really powerful in helping you identify the support and the resistance to trade? All right, so this is an indicator that is custom. All right, it's not an indicator you're going to find on your charts, which is why I said at the beginning of this, if you're looking at your standard charts, you're missing half the picture. And the half of the picture that's being missed is how much leadership, how much of its own momentum a stock has above and beyond what the general market is putting on it. All right. Now, I'll come back to price. But the second thing I said you really wanted to pay attention to is volume. Now, the most important thing is price. Don't get me wrong. But volume is incredibly powerful if you use it properly and you use it as a confirmation indicator. And unfortunately, the way traders analyze volume is just dangerously misleading. And it's because that's the way most books will teach you. Right? So the most important thing about volume is that, yes, volume will often precede price, but often. Sometimes, not always, right? So don't trade purely because of volume. You always need the price to confirm the volume. And the trend of the volume is actually more important than whether the volume is big or small. Now, the problem I found after looking at lots of custom volume indicators, and lots of the volume indicators were out there, is that most of them didn't do a very good job at telling me which way the trend in volume was really going. And looking at it bar by bar is just nearly impossible. And as I've said, use it as a confirmation, not as your trigger to get in or get out. So when I look at this particular chart and I see the market moving sideways after a couple of interesting up days, if I'm just trying to figure out whether or not the volume is generally bullish or bearish in this time frame, I don't know about you, but I can't do it. It'll drive me crazy. However, if I just look at a blue line over a red line, I can see it really clearly. Now, this blue line, red line looks exactly like the price line, intentionally, but this is actually now measuring volume, not price. You read it the exact same way. Okay? What that enables you to do is now look at these two indicators together, which is where I'm going with this next, and all you have to look for is good separation from the blue line and the red line in both situations. So now I can see as this thing is consolidating, volume is looking good. I'm not buying it because volume's looking good, but what I know weeks in advance is that if this consolidation pattern breaks to the upside, volume's in good shape. Same thing here. Market's pulling back, started to break out here, volume gets into gear, pulls back, volume stays into gear. Now I just draw a line on my chart and say, if this resistance level breaks and my volume is still in gear, that's a breakout I want to focus on. All right? We can keep it that simple. So let's go back to the banks. Go back to Bank of America. I initially showed you the price, but I showed you the price started to look positive as it's coming up over the 50-day moving average, stayed positive over the 200-day moving average. Two opportunities of just basic technical analysis looking good. Well, the volume actually started to look good before the price. The volume confirms the price here. It confirms the price here. That's not always going to be the case, as you're going to see as I go through more examples. All right? But the analysis, for the sake of just getting started with this, can be as simple as this. So here's XRT recently. The thing I like about XRT is that in the summer, I started pointing out that XRT looked like it was bottoming. Now, I was doing that because I could see the volume looked good, the triple play leadership or price performance line looked good, and it was coming back over the 50-day moving average. But the 200-day kind of put a lid on it. Another big technical resistance level, right? And when it fell off or fell back from that, look what happened. The triple play confirmed the fact that it wasn't ready to go yet. But when it came back to this 39 level and started turning higher, even before it got to the 50-day moving average, the volume was way ahead of the price, and the price turned up. Now, the interesting thing about XRT is that this thing had been a dog all year. And trying to pick a bottom in the dog is not really something that I like to do. As it turned out, on like December 5th, Wall Street Journal came out with a great infographic that illustrated by industry group which industry groups had the highest effective tax rate. Now, what does that mean? Well, at that same time, the market was trying to figure out whether or not the tax legislation was going to pass. But what the smart money was doing here was buying retail, betting that the tax legislation was going to pass, and retail, because it had such a high effective tax rate, was an industry group that was likely to have a huge benefit if it did pass. Now, I didn't know all that, but what I did know is that something was going on. The trend was changing, and the trend changes when smart money comes in, okay? Now, it was lucky that I even saw that article. I may have never seen that article, but I always can see what's going on in the chart. All right, so we'll come back to both of those things, but there was the third thing, right? The third thing was volatility. And like I said, volatility, as I would like you to look at it, is really more of a price level. And if you're only looking at what the absolute price level of the market is, then again, you're missing half the picture. You want to be able to measure whether or not your trend is actually in a healthy trend, whether it's overextended, whether it's consolidating, and by doing that, you'll know whether or not it's getting ready to move. Now, there's a lot of different ways that you can do this. And I found the easiest way to do it, in this case, is not a proprietary indicator, it's a Bollinger Band. Right? Now, there's a lot of different ways we can use Bollinger Bands. But for the purposes of this presentation, I wanted to let you know that there's 3 things you should absolutely look at. But I'm going to focus your attention on the price and the volume, because if all you did was focus on price and volume, you'll be way ahead. But if all you did with Bollinger Bands is look for the point at which they're squeezed. Now, I know there are people out there who have quote-unquote squeeze indicators. That's not what I'm talking about. I'm talking about something as simple as visually seeing that the market is compressed and letting Bollinger Bands be your red flag that you've got a compression simply by seeing, hey, this thing is compressed. Now, when the market gets compressed, it's going to break out and trend. Okay, markets go through periods of expansion and contraction. So which way is that breakout likely to go? Well, that's where your price leadership and your volume trend come into play. When you break down out of a squeezed band and you've got negative price leadership and negative volume, you expect that it's going to continue to the downside. All right. Now, in this case, it broke down, and a critic might argue that it snapped right back. I would highlight the fact that when it broke this band and broke this support, actually the bottom fell out of this thing for a one-day move. And yes, it did snap back, but it never really got over the middle of the Bollinger Band area. And when it broke down the second time, it had a pretty significant slide. All right. And without going play by play, when it started to turn positive on these, the trend continued to move higher. But unfortunately, it got squeezed again. The triple play indicators were both negative as it broke down, and the next slide was even worse. All right. Now, that shouldn't be surprising, because if you look kind of at the bigger picture of the trend in leadership with the red versus the black, it's getting worse. Right? So this thing basically made a new high. The leadership didn't have anything close to a new high. It was only getting weaker. Price looked like it was doing just fine until this big red candle here, which we all know is a bearish looking formation. But this is telling you this is a bearish formation that you don't want to buy the dip on. You don't want to buy the dip when it gets to the 200, because look at what your triple play looks like. You just wait until the triple play shapes up. All right. So the squeeze is an incredibly powerful way to identify high potential opportunities. This is one of my favorite examples of Apple, only because so many things came together. You had a squeezed market, you broke down from the squeeze, but your price leadership was still strong. So as soon as you snapped back, it just went right through the other side of that squeeze. Volume came in, everything lined up, and you had a really nice run. As soon as it started to roll over, it was confirmed by triple play. You could have avoided all this headache until triple play shapes up. Until the triple play shapes up again. And once triple play shapes up, you actually got it coming off the bottom of the Bollinger Band, and you have a nice move higher. Is that pretty straightforward in terms of how to analyze this? In terms of breakouts, really nice looking consolidation here in Home Depot recently. It squeezed. Before it starts to break out, your triple play is positive. Your volume was positive even a little bit earlier. So how do you use this? Where's my pen? It's as simple as, and there's more, it can get more complex than this, but it doesn't have to be. I'm looking at this chart and saying before it breaks out, after you got this big green bar, for the next 3 days, as it's sitting there, I know that triple play is telling me if this breaks out, this is one I want to follow. Okay? So the idea here is to know ahead of time which ones to follow, which ones to avoid, whether you're talking about going up or going down. All right, so let's do a quick review. Before you trade, you want to know what these three conditions are. If you do that, you'll know whether or not you've got one that really has great potential. Does it have good leadership? Is the volume trend strong in the direction you want to go? What's your volatility situation? All right. If your stock's missing one or two, there's just more risk of it. But if it doesn't really have any of them going in the right direction, the price could be saying one thing, but all three of these things could be saying the other. And those are the ones that you want to stay away from, right? The best example of that is going to be pullbacks to major moving averages where the leadership is broken down, the volume trend is going in the wrong direction, and your volatility, you might even be breaking down through the bottom of a volatility band. All right? You don't want to buy that. But if all you're looking at is a really nice correction to the 50-day moving average, you have no way of knowing. All right? The opposite is true. If something pulls back to a nice moving average and everything is still in gear, then as soon as the price action, and that's key, as soon as the price action confirms that it wants to go back higher, those are the ones you want to jump on. Now, let's have a little fun here. I have three examples. Let's walk through it. I covered up the symbol, and I've covered up the price action, and you tell me, buy, sell, or hold. All right? So right now, just using really basic technical analysis, this is coming back over the 50-day moving average, one-day close over the 50-day moving average, and kind of bouncing off the 200 based on what you've already learned about the triple play here. Is this a buy, sell, or a hold? Hold meaning sit, okay? All right, there's a little bit of uncertainty here, and that makes sense because the triple play isn't as obvious as it could be yet, all right? However, once we start breaking out over here, now would you have said buy, sell, or hold, right? Goes on, so it still gave you a couple days in here, but it gave you the heads up, all right? Now, pull back to under the 10-day moving average. Buy, sell, hold. Pull back to the 10. Buy, sell, hold. Hold, or sell. Hold, or sell. I don't have anybody saying buy. Well, that's good. All right. Definitely a get out of the way. Now it turns right around, bounces off the 50-day moving average, and you got a big green bar here. Are you going to look to buy any follow-through there or not? So the answer here is if it moves higher, would you look to be a buyer? If it breaks out over this new high, does it look like it'd be something you could buy? Now here's the value of this. If I'm going through charts, I pull up a chart, I could spend way too long trying to figure out, well, what should I look at here? How am I going to know if it's going to continue higher? I just look down here and say, well, if this thing goes higher and this thing and my triple play stays higher, then yeah, that's the one I'm going to want. And not only that, would you have more confidence to stick with this breakout when you see this kind of price leadership? I would bet that you would have more confidence to stick with them. All right, let's try another one. Breaking out over the 200, this one's a base. Doesn't really have a whole lot of momentum, but it certainly has been basing for a long time, right? What do you think of this triple play? Is this one that I want to buy going higher? Remember, it's got to break out of this base, or nah, let's move on to the next one. All right, again, this is the value of it for me. Do I want to waste my time looking at this thing tomorrow and the next day, or is this worth looking at? Everybody's saying buy. Dirty Waters, nice name, says definitely buy. All right, they don't all work. All right, it would be easy for me to say, look, they all work. They don't. But there's a bonus here. All right, there's a big bonus here. Even if you had gotten sucked in here, which I would say I easily could have been, you'd be tight stop out once it starts to fall apart. Here's the bonus. When you have something that is in transition, going from what has been negative to positive, and you get a head fake on the price. But look, when this thing broke down below the 50, the price leadership still held up pretty well. All right, volume bounced right back. So through all this consolidation in here, I'm looking at this going, if this thing turns higher, this triple play has held up pretty well. And by the time I have to make that decision, if it breaks out here, now, is this a buy, sell, or hold? So if you said buy back here, I would have totally agreed with you. All right? Would have totally agreed with you. What would you say here? Buy, sell, or hold? Now, I can tell you I have an unfair advantage, but I've just described it to you, which is when you get a buy that doesn't work out but doesn't completely fall apart, and then it bounces right back and your triple plays right back, yeah, that's a bonus, right? Nice breakout out of a base. Some of my favorite trades are the ones where you can get in early. The 50's just crossing the 200. But what happens very often? It pulls back. So this one pulls back to the 10. Buy, sell, or hold. You guys got the hang of this. Okay, you could hold if you're already in. What if you're not in? Is this a second opportunity? Buy? Hold if in. Right. Trader Doc, buy. Yeah, I would say so. And again, once it starts moving up and your triple play continues, because you know now triple play doesn't necessarily have to continue, and it continues, wouldn't that give you the confidence to stay with it? I don't know if it's going to go to the moon, John, but yeah, sometimes they do. All right. I don't know if this is the one, but I've got one that's really disappointing. I'm sure it's going to disappoint a lot of people. So let's take a look at this one. Pull back to the 10, or just under the 10, into the support level. Buy, sell, hold. Sell. Oh, wow, I got some aggressive sells. I'm going to go a little quicker. Yeah, sell. Not only that, as it gets weaker, this gets weaker. And as it turned higher here, look at how triple play just didn't even care. It was just going down. Now it's right back to where you might have had to sell, coming over the 50-day moving average. Buy, sell, or hold. Right? Now, isn't this an area where typically you'd be like, I'm not sure whether or not it's going to get through this support or roll over. Right? But this one is telling me, and I'm beginning to forget now, I like this. As long as this continues to go higher, triple play looks good. And here's another example where it drops back on a news event. Okay? And someone's saying early to tell. You were right, Lee. Drops down on a news event. But look, volume doesn't really move. Price begins to come right back. All right? So here's how I would trade this, and this is going a little beyond it. If I got caught in this gap, my stop would be under the low of the day, the gap down. If I didn't get caught in this gap, I'd be looking at this saying, whoa, triple play is still in gear. So what happens next? We get a big up day. Now let's say all you do is come to it at this up day. Now we're at another one of those points. Is it going to break through here, yes or no? Do you look for it to continue, or do you just say, forget this one, go on to another one? After this head fake, I'd be looking for it to continue. Now, it continues. Then it starts to stall out, like a lot of stocks do, right? This is the one that's going to disappoint people. Buy, sell, or hold as it's stalling out. Are we expecting this thing to break higher? Or, more importantly, if it breaks lower, are you going to get out if you're in? I would say I'd be out if I was in. Like, this is the point at where I'd be saying, all right, time to get out of this thing if it starts to break. Yep. Falls back. Now it looks like it's going to break out. Is this a breakout that you would want to trust? No. Okay. I agree with that. Not yet. Absolutely. Here's the bad news for a lot of people. This is Apple right now. All right? So and I actually didn't spend as much time on the other ones right now as I wanted to. Apple right now is not in a good situation, is it? So if Apple starts to move back up over 175, this triple play had better shape up. Otherwise, you have this situation all over again, or this situation all over again. Now, if I just look at Apple's pattern right here, I think it looks okay. Looks pretty good. It's just a big consolidation. But the negative of this is if it breaks down from here, if Apple breaks down below this recent attempt at the 50-day, triple play is negative. That's telling you that Apple has weakness that this chart isn't showing you. All right? If it doesn't get strength as it breaks out, I wouldn't trust the breakout. Now, one last chart. If you take this same thing and just figure out which industry groups are the best industry groups to go into, wouldn't that be powerful? Now, right now, Bysshe, as I talked about earlier, likes to focus on what she calls her modern family, and I apologize for the text size on this. This is 5 sector ETFs and IWM. All right? XRT for retail, SMH for semiconductors, IWM for the broad market, IBB for drugs, IYT for transportation, KRE for financials, regional banks. This is as of today. All right? Now, most people are looking at this and trying to figure out which way these all are going to go. But wouldn't it be a lot more powerful if you could actually see which of these have strong leadership and strong volume trends? All right? So which one would you rather be looking at? All I have to do is look at, here's XRT. We talked about this earlier. It had a nice run. Triple play was positive. But now, you tell me, if XRT starts to roll over here, this is not looking very good. All right? If it breaks out to the upside, chances are triple play will shape up. But if it breaks down, it's not going to be a pullback that I'm going to want to look to buy unless triple play changes here. On the flip side, semiconductors, when they rolled over here, they didn't came down to the 50. There was no reason I wanted to be a buyer in there, right? But now back over the 50, hey, as long as it continues, volume's been shaping up for a while, price is just getting there. This looks like if it continues higher, it's one to follow. IWM, weak, right? So if it continues to break, it's doing it without any leadership. IBB, one that I'm personally in, you can see why. I've been looking at this volume for a while. I'm just waiting for it to break out. It finally did. Triple play looked good. IYT, huge breakout here. It was clear here that if it continued, it was acting like a leader and has continued to act like a leader. Financials look great today in the beginning, but they look terrible on triple play. No surprise they didn't follow through here. All right? So my point is that really quickly, I can see which areas of the market are leading and which are not. All right? Now, it's taken me a little longer than I'd hoped to get through the whole thing. If we have time at the end, I don't know that we will, we can look at some of your stocks as well. All right? But before we do that, I want to give you an opportunity to get these indicators and more. And the way that you can do that, and in fact, I've already said this, that right now it couldn't be a more exciting time to be able to identify these leaders, as the market seems to be continuing the strength of 2017, but at the same time, if it starts to roll over, the things that pull back are going to be great opportunities as long as they're leaders. But if they're not leaders at these heights, it could be really dangerous. You don't want to be caught in the wrong trends as they pull back. All right. So the way that you can get your hands on this is through our Triple Play Advantage. So if you become a member of Triple Play, you will learn how you can minimize your risk with these. You'll learn more specific patterns, not only for daily but intraday entries. and you'll learn more rules in terms of applying the indicators to common trading patterns to improve your winning percentages. And the way we do that is through an instruction that's 3 hours, about 3 hours of streaming video, lifetime access to these recordings. All you have to do is log into the member area and get it. And we go through 6 specific trade setups that include high volatility reversals, breakout failures, identify the best breakout trades, squeeze trades, similar to what we talked about, ambush high trades, head fake low trades, all kinds of setups. But even if all you did was use these indicators in a way that I just described to you, which you could pretty much do right out of the box, this would be well worth it. Now, if you were to just go to our site, this would cost $697. But I'm a pleasure being here in the room, so I've got a special offer for you guys. Now, in addition to getting the training for life, we're going to give you lifetime access to the indicators. Now, I have to stop right here and make sure that I'm clear. These are not indicators that are on your charts right now. So your trading platform is important. You need to have a trading platform that can be customized. I'm not talking about just changing the duration of some indicator, right? They need to be able to be set up so that you can actually put a custom indicator on it. Here are the trading platforms that we definitely know are supported. All right, and you'll see this on the page that I'm going to send you to as well. Now, if we were to just sell the indicators, we could easily sell them for $497. Not only that, when we give you the indicator, it's not a magic little piece of code. You never know how the indicator is calculated. When you get this, we're going to tell you how the indicator is calculated, so you'll know exactly what you're looking at, so you can better understand how it works. And not only that, that means you'll have it for life. It means you can put it on as many platforms as you have. We just ask, obviously, that you don't go giving it away to everybody else. All right? We're trusting you for that. But so that would be a $497 value for itself. All right? But I want to make sure that you can do this in all market conditions. And I want to accelerate your ability to learn how to do this easier, right? So what if I handed you stocks and ETFs that are set up with good triple play conditions every single day? We have a way to do that. All you have to do is log into the members area. And if you're a member of our alerts and mentoring program, you will get daily rankings of bullish and bearish opportunities. Right? This is just a quick screenshot of inside our member area. We show you today's bullish and bearish stocks and recent bullish and bearish stocks, meaning going back 5 days. So you'll get stocks that have strong triple play or really weak triple play opportunities every day. In addition, every week I make a mentoring video, and in that video I go through the list, pick a few stocks out, 3 to 6 stocks, and tell you which ones I would focus on, where I would look for entries, where I would put my stop, and why. It's like being able to look over my shoulder as I decide which stocks I'm going to trade the next day and where I'm going to trade them. Now, this service is usually $97 a month, but I'm going to give you a year of it as part of this package. So that's $1,164 value. So all in, a $2,358 value. Now, in addition to this, we want to make sure that you know how to use it. And if you have any questions, every month we do a live Q&A. So that means you can come and ask any questions you have, and we'll also do kind of a special training session. And this live Q&A is actually coming up. I think it's usually the 2nd or the 3rd Tuesday of the month. So this is coming up shortly. You can ask any questions you want in any market environment, and you can get personal help with your favorite strategies, and you can make sure that it works for your style. And you have access to this live Q&A for life. Okay? So it's not just a year for this. You have a monthly session for as long as they exist. So normally this would be $2,358, but if you're one of 25 people today, thank you very much for coming. I really appreciate it. You guys understand the value of education. $497 one-time payment. All you have to do in order to get that is go to this special URL, marketgauge.com/candlestick forum. All right, now that's, so Becky's just put that in the window, so you just click on it there. All right, so as I said in the beginning, I want this information to be useful to you. If you decide the indicators aren't for you, then at least I hope you walk away with the understanding of the importance that there are other forces out there that are pushing markets through support and through resistance, and those forces involve leadership, all right? Trends that are happening in addition to the price trends, all right? Now, with any luck, this could be you, but there is no way I can guarantee that you're going to be able to triple what you spend on this course only trading one option contract at a time. But the possibilities are there, all right? So, as I said, one full year, meaning you'll get the bonus full year, $497. You still get lifetime access to the indicators and the training. But we do have a better deal, and the better deal is if you know that you're going to want the scans and you know you're going to want the mentoring for 2 years, rather than have to worry about $97 a month the following year, you can lock in a second year for just an additional $297 for a total of $794. All right. Now, recently we've had people say, look, I don't like these renewals things. All right. So we recently decided, well, we'll try this. So we're still in the phase of trying this, and we have an even better deal. The better deal is lifetime access to the scans and to the alerts. So that's $994, one time, no annual fees after that ever. All right. So just to be clear, for $497, you will get everything you need for the indicators and for the training for life. If you want the mentoring and the scans for 2 years, $794. If you want the mentoring and the scans for life, $994. All right, so you pick what works for you, but you do have to be one of the 25 today. We only take people, we only take in members in small classes, so if there's any help that's needed to get set up, we are able to do that in a timely way. So marketgauge.com/candlestick forum. All right. With any luck, as I said, you'll be writing us like Dylan, hopefully saying thank you, feeling like you're fortunate to have stumbled on Market Gauge, and feeling like Triple Play has dramatically improved your trading. I know for me, this is, as I said, one of my favorite ways to determine whether or not I want to trade the stock, right? And this one, I just think exemplifies what too many traders often feel. I know Doug has been a long-term member, and I just love this quote. Truth be told, the morning paid for MMM subscription, which is a different service, and my Triple Play enrollment. Tomorrow's another day. He's a realistic trader, but at least I'm not sitting today in a pool of my own sweat and wondering what just happened to my portfolio. All right, it's just an illustration of you'll be a lot more confident. Okay, so I have another bonus for those of you who act quickly, and that is we've done what I describe as the accelerated implementation training. And this is me looking at the markets in real time, all recorded, and showing you how to identify the patterns that have the most profit potential, showing you how to identify setups that could trigger in the particular day using the alerts, and showing you how to apply the Triple Play indicators to setups you may already be trading, right? If you already have particular patterns, wouldn't you agree that seeing this strength of the trend would be helpful? And a whole lot more. Now, I did that with a focus on if you just looking at daily charts. And then I did another one because this one was so well received. And in fact, I could take these bonuses and sell them as their own courses at $397, but it'll be included in your package. The second one I did, I focused on intraday tactics. Not necessarily because you wanted to be a day trader, but by understanding the intraday tactics, which we have taken from our floor trade experience, you're able to minimize your initial trade risk. You're able to identify the best days to enter or even exit. And you can take advantage of the intraday price volatility rather than fear it. Right? So you'll get both of those, both $397 value as part of this package as well. So all you have to do is go to marketgauge.com/candlestick forum. You'll get the lifetime access to the training, lifetime access to the indicators. You'll get a full bonus year of the alerts and mentoring, and you'll get the bonus fast track to implementation and the bonus intraday entry tactics. All right, $497 or one of the other special upgrades, totally up to you. All right. So, Martin, you're saying it won't take your email. I'm not sure why that would be. What, like, you may not want to put what your email is. That doesn't really sound normal. Unfortunately, I can't go there. Can it be used with Schwab Street Smart? I don't know. I want to say I don't think so. I would call them and ask them if you can create custom indicators. I know it'll work for Fidelity Active Trader, but I'm pretty sure Schwab Street Smart is not on our list. All right. Are there any questions? Have I answered all the questions? I try to cover everything that I think will be asked. All right, so Martin, one thing might be happening when you go to the page. There's two places to enter, one to create a new account, one to sign into an existing account. You want to probably create a new account. Dean is saying doesn't accept plugins. It doesn't necessarily have to be a plugin. The Schwab actually. Doesn't have to be a plugin necessarily. In some cases, like TradeStation or Thinkorswim, we do have files that you just import. But in other platforms like TC2000, I think we give you the formula and you plug in the formula to create your own indicator. So if you could write a script in your platform, then there's a good chance it would work. It totally depends on the platform. All right, so if there, I know I've gone over my time limit, and I apologize for that. But I hope that the like the buy, sell, hold really exemplified how even if you just use it in a very simplistic way, even before you get to the 6 specific patterns that you'll learn in the training. And in fact, for those of you who become members, I would encourage you actually to go kind of straight to the accelerated implementation because the point of that whole exercise was to basically take what I've just taught you here and take it to the next level and enable you to just pull up a chart, look at the chart with basic support and resistance, basic key reference points for where you would enter and exit trades, and say, does this line up? Where would I get in? Where would I put my stop? All right. So the way the mentoring works, so the mentoring is a weekly video that comes out. Well, there's 2 forms. There's the weekly video that comes out typically on Mondays where I look at the list, the scans, and pick out 4 to 6 stocks or ETFs and say these are the ones that I'd focus on over the course of the next week. This is where I would look for potential entries. This is where I would have my stop. And sometimes I'll be saying, look, I'll buy this one if it pulls back. Or sometimes I'll say, I wouldn't buy it if it pulls back, but I definitely buy it if it breaks out. And so you're able to see what I'm thinking given the condition of the indicators and the price patterns on the chart. The second form of the mentoring is the monthly coaching, which is live. And that's really intended to be a Q&A, but my personality is such that if we don't have questions, I usually have something to focus on to make it a class-like setting. Great, Martin got it to work. Excellent. Sorry for the inconvenience there. What about Merrill Lynch? I have no idea, unfortunately, what Merrill Lynch's platform is. My guess, I don't want to be negative about it, but my guess is that Merrill Lynch's platform probably isn't encouraging you to write your own indicators. But again, that's the question. Can I create my own indicator for Merrill Lynch? If I'm allowed, I will show some stocks. But this is really, I know I've gone over my time, and I really want to be respectful of everybody's time. You know, Steve's time, Jim and Becky, and everybody who does the good. All right, I could show some individual stocks. So let's take a look at that. So I happen to use, all right, before I do this, any other questions? So I happen to use TradeStation. So I'm going to do this. I'll do it this way. So while I'm doing this, you can still go to, don't want to go to Triple Play. You can still go to Candlestick Forum. That's where you want to go for the best deal. Okay. And here's the Apple. You can see this is what we were just looking at. And while we're doing this, okay, question. Does it work on futures? I'm going to say no. All right. It would be best to just focus on stocks and ETFs that are related to stocks. All right. And the reason is that, remember, this is helping identify leadership. And so the leadership is really the leadership within the stock market. Could you kind of bend it to work with the futures? I could, but at the risk of it being disappointing, I'd rather not take the chance for you. All right? I really only want people to have a great experience. I'm worried with futures that might not happen. Charles, you said you had a question. How effective is this with low price stocks under $10? I would say that the price level isn't necessarily the factor, as long as it's like a liquid and a liquid stock, and for lack of a better term, a real stock. I mean, if it's penny stocks, extremely volatile, then I would say no, because it'll just be too volatile, or just too out there. All right, let's take a look at some of the stocks here. Now, I'm going to also warn you, when I've done this in the past, it's almost impossible to get to everybody's stock. So I do want you to see, though, that I'm not just cherry picking this stuff, and this is how I would use it. I pull up CTSH, and this is how I would break it down. You guys follow along and see if you would see it the same way. So in a really simplistic way, notice I don't even have the Bollinger Bands on here, because I want to keep it simple for right now. Coming up to the 50-day moving average, if this thing breaks out and continues higher, great, but it's going to have to move higher. Triple Play is going to have to come up and and move over the red line in a significant way. Otherwise, I wouldn't spend any time on it, all right? If I was in it, I wouldn't necessarily, well, I wouldn't be in it based on this. KRA. All right, KRA, and this is something I like about doing this, is you guys have ideas that I haven't seen. What do you guys think of KRA? Now, the way I would break it down is the question is, if it breaks out over this level, if it breaks out to new highs, would it be one that you'd follow? Now, if I was looking at the breakout, I'd be looking at this round number of what looks like 50, sorry, this round number of 50 as a decent level stop, as well as the low of this inside day here as the stop. So my trade breakdown here, this is what you hear in the mentoring to a large degree. If this breaks out to new highs, is it a buy? Is it a hold? Do you ignore it? And the stop here could be under this day's low, which looks like it's probably, this high is 51.50. The low of the day is 49.35. Round it down to 49. It's about $1.50 from the breakout to a decent stop. This number down here on my charts is the average true range. I won't go into that in too much detail, but if I can find a stop that's less than or around one average true range, looks good to me. So I like it, and I can do all that quickly. Why? Because price is looking good. Volume has been there. That's what we want to see on a breakout. NVIDIA, good question. So from a trade point of view, I would say it's extended. From a triple play point of view, it's back in gear. All right. Unfortunately, the way it went up so quickly might have been hard to get in. However, I didn't go into this in the training because, well, I ran out of time as it is. But you may notice on the lower right-hand corner, I have a 30-minute chart. And this 30-minute chart I use to find stuff before it actually starts to move. So you can see the triple play actually shaped up on the first day of the year, right here. And that means that on the open, the next day would be one that I would know the day before it was already starting to establish leadership. A better looking one, and one I actually acted on from this point of view, is Amazon, right? So Amazon, you can see the triple play on the daily, not really all that convincing, right? I mean, it still looks great. It looks great over here, so I've been following it, since then. But when I saw Amazon on day one of the year already turning positive, then it's like the 3-day gives me a heads up into what's going in. So I'm in Amazon a little earlier. So nobody asked that question, but yeah, the intraday can be pretty powerful too. Dust. I haven't seen this one. All right, so this is the reverse, right? This is the reverse of gold. So, and Dirty Waters, I guess you're asking the same question in reverse. I don't know if you're trying to trick me here. Dust is, I don't know that it's exactly the reverse because it's the triple reverse of the GDX. So really, we should get the same answer in reverse. So let's focus on GDX. So GDX has looked interesting ever since it took out the 200 here. For me, I would have been looking at it pretty much as if it can take out this level of resistance, would I follow it based on triple play? The answer would be yes. If it continues to move higher, it looks pretty good. Intel. Now, Intel just had the news. This thing will not predict the news. So the way I would use this is if Intel starts coming back and triple play starts to come back, I think Intel actually will look interesting. Will look good. Will look bullish. And the reason I say that is because it wasn't a pretty good mode. It was in a great mode, and then it had that bad news event. All right. TRVG. So can you guys see how quickly you can pull up stuff and assess it, bullish or bearish, whether or not you should follow it. Now, what this suggests is that we might not have as much data as we'd like. That's why we can't see it. All right, this is a pretty good example of one that's premature. Here's an example of low price stock. This isn't as much separation as I would like. So this is one where I would say I would anticipate, not expect, that although triple play looks like it's shaping up, it could disappoint. And if it disappoints and triple play holds up, then that's the bonus, right? I showed you a couple ones that didn't work, but when they don't work and don't completely fail, then I'd focus on it. This one just looks a little premature because, as you've seen, when they look really good, you get really good separation, and that's not really good separation yet. PIR, I'm coming to SLB. I'm coming there. Not ready yet. Oh, I didn't realize this thing got so hammered. Yeah, I'd say it isn't ready yet. SLB. I knew this was coming. That's what I was saying. So you tell me, SLB consolidating under the 200-day moving average for days, triple play positive in both price and volume for days. The question is, when it breaks out over that 200, is it one you want to follow? I know 2020, hindsight's 2020, but clearly this was a really good looking setup, right? Now, you haven't missed it completely, right? The way I look at these is you got a strong breakout. These are the ones that on a pullback, as long as triple play holds up, that's the pullback you want to buy. And then what I start doing is I start looking around. Now, I knew this one was going to look good because I actually recommended OIH in the recent mentoring video, and you can see why. Volume has been looking great through all this. I mean, look at how this actually went down to new lows. Volume didn't budge. And this one, just like SLB, consolidated, only this one was consolidating over the 200-day. But these are basically synonymous, right, because SLB is a large weighting in OIH, I believe. Right, so you can look around at other stocks in industry groups. Square, I haven't looked at this one in a while. Interesting. So I would say it's not there yet, right? You want to see good separation. And an example of a good separation is you see this good separation in here, and this is a great example of one that you really look like this breakout should have just run, right? This breakout over here, this looked really good, volume looked really good. It didn't run, but it didn't fall apart either. And one of the things I look at is close below the 10 and then does it follow through? If you close below the 10 and then immediately reverse and your triple play is back in gear, yeah, I would say either you never should have gotten stopped out or you should get right back in, or if you were never in it, this is that bonus, right? It's like I didn't get caught in the head fake. Now I see it's a head fake and, bam. And if this thing never looks back, now it gets crushed, kind of needs to recycle. I'd look for some more separation. All right. Amazon, I kind of showed you Amazon. I actually bought the calls too. On this break, I've been long Amazon, I think, since down in here. But admittedly, I was long in here and then got stopped out here. I gave up on it here and bought it right back. All right. And I bought it right back because of the 30-minute and because I thought this was the head fake. Triple play was not a good. This does not tell me to buy it here. But if we look at the 30-minute, this told me it was a head fake. Point is, I'm kind of long in here. I just want to be long this thing whenever I can be, but I'm not going to ride it down. This whole thing looks explosive. This is just starting to shape up. Volume looks good. Price does not look good. This price action here doesn't look good. All right, it's not terrible. Just doesn't look good. But if this breaks out, I expect this will move higher. If it doesn't, then I'll look to take profits. In fact, if this rolls over, I'll take some of my profits in the stock, keep the calls, because this hasn't shaped up. All right, so that's how I use it. Now, my calls are longer dated. I think I went out like 4 or 5 months. But because I think we have the opportunity for the market to really melt up. If it doesn't happen, you can all see how I know I'm going to get out of the way. But if it does happen, I want to be in stuff that could really melt up. AMD, I didn't, let's look at AMD. Look at a couple more, and then I'm going to call it a wrap, because clearly you can see I love this. I love looking at the markets this way, and I could be here for way too long. So AMD up against the 200-day, yes, this looks like it's turning, so I would say that's positive. But you need a better, I would say you need a better price setup. There isn't a good stop. This isn't so compelling. Like you've seen the ones where they look really, they got good separation. So you could do it. I mean, you could, I would expect it to have further strength, but it's in a price area where it looks like it should consolidate or look like it should have some trouble. And this is just the beginning of the turn. There's something else with AMD and Snap, and then I think we'll call it a night with Snap. All right, so Snap, while we don't have a whole lot of data, does not look good. I say that because it's pulled back, and the triple play looks negative. Volume, I call it neutral. So if Snap comes back up over this high and triple play completely reverses its tune, okay, I've changed my mind. But more than likely, it's going to take more than a couple days for this to turn around, and it would take a couple days of good volume for this to turn around. So I would be patient on Snap. I would look at Snap as if it can get over the round number of 16, certainly if it can break out over this base with a good-looking triple play, then yeah, great. But until then, I don't need to worry about it. All right? So with that, I am going to call it a wrap. I really appreciate all the questions, the interest. Like I said, you can have all this, and you can be up and running by tomorrow. All you have to do is go to marketgauge.com/candlestick forum. Thank you very much to Candlestick Forum, to Steve and Jim and Becky who make this all possible. Thank you all for your good questions. And as I said, if you walk away from this presentation at this point without the indicators, please know that leadership and volume trend and the Bollinger Band as a mechanism for identifying whether things are compressed, extended, is a really important way to look at the structure of a trend. I use candlesticks, the moving averages that you see here, and they're critical, all right? But there's a lot more factors out there that will help determine whether or not they're going to hold, all right? So at least if you know that, you don't beat yourself up when the patterns don't work, right? There are other forces out there. So with that, I'm going to call it a night, and thank you, Steve. Thank you, Jim. Thank you, Becky. Thank you for everyone who's been there. And from everybody here at Market Gauge, I hope everybody has a really profitable 2018. And that's it.